If you had invested just $1,000 in some of the world's most well-known companies 10 years ago, how much would it be worth today? Today, we're going back in time to see exactly what would have happened if you had put your money into companies like Apple, Amazon, Tesla, Netflix, and more, starting with $1,000 each. The results might surprise you. Some companies turned modest investments into fortunes. Others, not so much. Let's start with Apple. On May 21st, 2015, Apple stock was trading at approximately $125 per share, adjusted for splits. With $1,000, you could have bought 8 full shares. Over the past 10 years, thus, Apple has grown steadily through product launches like the iPhone 6s, the Apple Watch, the M1 chip, and consistent stock buybacks. As of today, those 8 shares would have turned into approximately 66 shares, factoring in the 4-for-1 stock split in 2020 and the 7-for-1 split in 2014. At a current share price of $190, that's nearly $12,500. A $1,000 investment in Apple would have returned over $11,000 in profit. Now let's take a look at Amazon. In May 2015, Amazon was trading at about $430 per share. With $1,000, you could have bought 2 shares. But in 2022, Amazon performed a 20-for-1 stock split. Those 2 shares became 40 shares. Today, with Amazon stock around $180, your 40 shares would now be worth about $7,200. Not as high as Apple, but still a solid return from a $1,000 starting point. What about Tesla? This one is wild. In 2015, Tesla shares were around $36, adjusted for multiple stock splits. $1,000 could buy about 28 shares. Tesla performed a 5-for-1 stock split in 2020 and a 3-for-1 split in 2022. Those 28 shares would now be worth 420 shares. At today's stock price of around $170, that investment would now be worth over $71,000. From $1,000 to over 70 grand in 10 years. That's the power of exponential growth and hype. Let's take a look at Netflix. Back in 2015, Netflix was trading at around $90 per share and had a 7-for-1 stock split in July of that same year. That means your $1,000 would have bought 11 shares, which turned into 77 shares after the split. Today, with Netflix trading around $600 per share, that investment would now be worth over $46,000. Not quite Tesla levels, but still a huge return from a small start. Now for something different. Let's look at Meta Platforms, formerly Facebook. In 2015, Facebook was around $80 per share. $1,000 would have given you 12 shares. Meta has not had any stock splits, but its value has grown significantly, especially from digital ad dominance and expansion into platforms like Instagram and WhatsApp. With shares now around $420, those 12 shares are worth about $5,000. A 5x return, not bad at all. Let's balance it out with a poor performer. In 2015, General Electric stock was about $27. $1,000 would have bought you 37 shares. GE underwent a 1-for-8 reverse split in 2021, so those 37 shares became just 4.5. At today's price of about $160, your total value would now be around $720. You would have lost money even over 10 years. Now let's look at an ETF. Suppose instead of betting on individual companies, you had put $1,000 into the SPDR S&P 500 ETF, ticker symbol SPY. In 2015, SPY was trading around $211. That would have bought you about 4.7 shares. Today, SPY trades at over $530. Those shares would now be worth about $2,500, a 2.5x return, with significantly lower risk than picking stocks. What about cryptocurrencies? Let's throw in Bitcoin. In 2015, Bitcoin was worth about $240 per coin. $1,000 would have bought you around 4.1 Bitcoins. At today's price of roughly $65,000 per coin, those 4.1 Bitcoins would now be worth over $265,000. Yes, from $1,000 to over $250,000. That's what exponential risk and exponential reward looks like. On the opposite end, let's consider a now-defunct company like Blockbuster, which had already declared bankruptcy before 2015. But let's say you had invested in a struggling retail stock like Sears instead. In 2015, Sears stock was trading around $40. That $1,000 investment is now worth practically zero. Sears no longer trades on any major exchange. This shows that picking the wrong company can lead to total loss. What can we learn from this? First, the difference between good and bad investments can be massive, not just 2 or 3 times, but sometimes 100 times or more. Second, holding for the long term matters. Many of these stocks had temporary crashes, like Netflix in 2022 or Meta during the pandemic. But those who held through volatility often came out ahead. And third, the best investment isn't always the flashiest. The S&P 500 may not make headlines, but it still delivers solid, steady returns over time. If you're investing today, don't just chase the hottest names. Think long-term, think diversified, think disciplined. Because the next Apple or Tesla will look boring at first, and the next Sears will still look promising, right until it disappears. So, what would you do with $1,000 today? Would you invest in a proven company like Apple or Amazon? A high-growth risk like Tesla or crypto? Or play it safe with the S&P 500? Let me know in the comments. And if you want to see what happens to a $5 a day investment over time, check out my other video linked right here. Thanks for watching. Like the video if you learned something, subscribe for more breakdowns like this, and I'll see you in the next one.